Hello guys and welcome back to another post-market analysis. In this video, we're going to see how Nifty and Bank Nifty has performed today and whether there are any key takeaways and what are the best possible trades that could have worked for today. And after that, we are going to see both Nifty and Bank Nifty on a daily chart to understand what's happening on a larger time frame and so that we can be prepared for the coming days. All right. So let's start it from the daily chart. All right. So yes, here we are in the daily chart in of Nifty, but let's first check the Bank Nifty. All right. So here we have the Bank Nifty chart on a daily time frame. See here today we can clearly say that this candle is very indecisive and it has got a very small real body and it has got wicks on both the sides. So this is almost close to doji. Some will argue that this is not a doji because of the small real body that you see and the less shadow towards the downside. But whether it is doji or a spinning top, it doesn't matter. What matters is the size of the candle is really very small. But to understand candle, the price action of Bank Nifty today, we need to be little. We need to have. We need to pay little attention to this portion. Whereas these two candles, see these two candles, if you notice in the Bank Nifty, that is the previous working day is this candle, that is April 30th, and we had seen a pretty good trending day towards the upper side on April 29th. Now if you combine these two candles and see, we have close of those two candles almost at same level. Okay, so almost at same level. Now what this signifies is this will any two candles, if especially if the market is towards the upper side from the last few days, and you have one green candle which is pretty good till then, and then suddenly you see a red candle where your close is matching with your previous green candle. In that case, this is called as a candlestick reversal pattern, a very strong candlestick reversal pattern called a counter attack lines. Okay, so this is called counter attack pattern. Now this is a reversal pattern, and so and we have already seen that happening after this breakout. Okay, previously you had this swing high, now you have seen a breakout above that, but immediately you haven't seen any confirmation candle in that place. You have seen a reversal sign happening at that level. So and after that, what we have today here is obviously a small candle with a very small indecisive uh, a decision in the market. That's because you are at this previous swing high, which is now acting as a minor support area for this Bank Nifty. And now to change this view, we need to see a close above the highest point of this candle, this counter attack pattern. In this case, this red candle has got the highest high. So you need to see a close above that. Until then, we need to be a little careful with the momentum. And this doesn't see any reversal sign for that matter. It doesn't mean that market is going to immediately reverse and go towards the downside. It means that the previous trend, which is towards the upper side, is is done for some time. It doesn't mean that it will immediately reverse. It may go sideways from here and take a breakout towards the upper side, or it may go towards the sideways and it may go towards the downside, or it may immediately reverse. So all these are the possibilities after you see a reversal sign. But you need to also pay attention to where this reversal sign has come. It has come right above this previous swing high where you are seeing this may act as a support. But if this breaks, then we may expect real trouble towards the downside. So, and there is also a reason for this because the companion for the Bank Nifty is Nifty, right? So here in the Nifty, we haven't seen a breakout yet. That's the previous all-time swing high of the Nifty. And you see here, by the time we have seen a breakout in the Nifty, here in the in the Bank Nifty, here in the Nifty we haven't seen that breakout because you have this which is strongly acting as resistance. It's very clearly evident with this candle. That's uh, the case where in the Bank Nifty your April 30th candle. Let me change the chart. So here we have, this is the Bank Nifty chart, and April 30th candle is the candle which gave us this pattern called counter attack pattern, right? Now in the Nifty, the same day, you see we have seen a red candle coming at this resistance area, and this is also pretty close, but not that but not that significant as a Bank Nifty, because there is some difference between the closes here. Okay, there is some difference, but that difference in the Bank Nifty is really marginally less. Okay, so and this is close to a pattern called dark cloud cover, which is also a reversal sign. But for that pattern, you need to see a close of this red candle below the 50% of this green candle, but that's not the case. So are even if you are not seeing a very strong a reversal pattern here, this red candle itself is saying that the market Nifty is bearish at this level. You are seeing a lot of supply coming. There's no demand. We are seeing sellers pushing in the market in all the ways possible on this particular day. And now today there is some difference. In the Bank Nifty, you have seen a candle which is close to a doji, but here you see this is a normal average green candle that you are seeing. So Nifty is looking fine. It's not looking that problematic as the Bank Nifty. In the Bank Nifty chart, see, if this is Bank Nifty chart, this candle is looking absolutely flat. Okay, it's indecisive, but we cannot say that with this candle in the Nifty, because it's an average sized green candle. So and remember that in the Nifty, to break that bearish view, you need to see a close above this resistance with a proper confirmation candle. And also remember, both in Bank Nifty and Nifty, we have all our previous swing lows still intact. Let me show you that, starting from the Bank Nifty. So this is the Bank Nifty chart. That's your high. This is your low. This is your high. That's your low. That's your high. This is your low, but you haven't seen a close below that with a very strong confirmation. We have seen only one candle. So even though that's all the way till there, this you even if you take this as a breakout, but that's failed because you have seen a close above that. So pretty much your last two swings are really safe in the Nifty. See, that is safe, that is not broken. This is safe, that is not broken. So even if you see any momentum towards the downside, that will be a corrective momentum until it gives a close below that. So that's the case in the Nifty. And remember, Nifty is close to this resistance area. All right. So that's about the Nifty chart. Let's quickly remove all these drawings and then shift to our Bank Nifty chart. And see, in the Bank Nifty also, here we have a high, low, high, and this is not broken like a Nifty. This is again a higher low, again a higher low. So all these are still in intact, and you are there. So on a very large picture, we are still in an uptrend based on these swing lows which are still intact. See, we are talking about this, this. So whatever happens before that, it is only a corrective move. It doesn't mean that you are not going to see a downside momentum, but I'm telling you from a very wider picture. And see here, we have seen a couple of red candles after a reversal sign, but that is at this level, which may act as support. Now if you see a breakout from here towards the downside, that's a lot of trouble. And if you want to see Bank Nifty going towards the upper side, then you need to see a close above this high. So that's how daily chart of Bank Nifty and Nifty are looking on a daily time frame. Let's quickly change our chart time frame to 5 minutes. That's our intraday time frame, and see how the price action of the Bank Nifty and Nifty are. So both in Bank Nifty and Nifty, it's very obvious that, see, it's very uh, a trending day here on this particular day, and that continued a little bit till there. But on this particular day, April 30th, we have seen a sideways momentum for some time. Then we have seen a high, and immediately at this point, we have seen very sharp momentum towards the downside. And today, it has gone high, it has come back, it has again created a high, but failed to give us a close above that. And it came towards the downside, and later on, we haven't gone towards that level, which is clearly saying that the market is not bearish, but it's moderately towards, it has gone towards sideways for most of the time. But let's look at this in a greater detail now. Now let's let's get this like this so that we can see it better. So see, now your first resistance is obviously this. Okay, we have drawn that based on this wick there. And when your bank nifty is into that area at around 10.5 and 10.10, these two candles are very clearly evident. And this candle, especially 10.15 candle, which gave us the close below that area, has is telling us that it's not definitely that bullish. And even if you want to enter there, this is only your target, and that's your stop loss. In this case, your risk versus reward ratio is not playing at your favor, so you would not pick that trade. And see, looking at this, this is a perfect hammer, so why not draw a very good support area there like this. And now you have seen a candle close at 11:05, followed by a confirmation candle at 11:10. But that came exactly at this level from where you have seen a sharp momentum towards the upper side. So you don't want to take a risk there. So there is no trade option there at all. And here you have seen a breakout, and here you have seen a confirmation candle too. Now if you look at this on the left, there is no proper support level earlier. Okay, so you don't want to take a trade there. And look at what happened. Okay, see, first of all, this is a, if you, even if you take this as a proper support area, and if you want to take a trade there, let's consider this. Okay, even if you are entering there, because you have seen a proper follow through candle at this level, if you want to enter. And if you look at your chart on the left, your next price action swing reaction was there. So that should be your target. Let's see if this is your target, and then that's your stop loss. In this case, your risk versus reward ratio is looking good, and the breakout has also given us a confirmation candle. So even if you are entering there, you should have taken this as your genuine stop loss after this green candle, because it has given us a close above that level. And look closely, what happened after that is it absolutely turned flat. Okay, and the real problem, let me now reduce that and take this as a resistance area, because this is your fresh swing level. Look what happened here. You have seen a bearish candle, and from there a very small chance for the bank nifty to go towards the downside. And here you have seen a perfect shooting star candle with a red candle followed by that, which is a bearish engulfing pattern. We're talking about these two candles. But then again, if you want to enter into your trade there, this is, that could be your immediate first target, which is very less compared to your stop loss. So it's not a good day in the bank nifty. Okay, so a small stop loss here is only one trade which is looking feasible, but that too is a genuine stop loss, so it should be okay. And now let's shift our attention to Nifty's 5 minutes chart and see how Nifty's chart is looking. So immediately looking at this chart, you can say that this is an obvious uh, resistance area for some time. But look what happened. You have seen a breakout with a positive candle followed by that, which is a good sign. Now in this case your target should be somewhere there, because that's your swing high. That's your swing high. It's a pretty good trade, pretty good chance it gave to uh, pick this position. But look, that's your stop loss, very good chance for your SL. But look what happened here. After this candle, if you are entering there, it again came back. It went towards this level. Again it has come back, which means that this is your fresh high, which means that you should modify your target to this level. In this case, see, this candle, okay, is close to that level, and from there you have seen a fall. Either you would have exited there, but if you have failed to notice this swing high, then you would have taken your stop loss. But after that, you see, it has gone all the way till there. And it after see, all these levels are resistance. See, again, this is a fresh resistance level. So from there you have seen a breakout, but then this candle is telling that this is not a proper confirmation candle, because this is a doji and it has got a lower high. So it's not a good sign. But then here, if you see, you have seen a bearish engulfing pattern. And from there, if you want to trade towards this level, okay, that's your earlier level. But then this should be your new target. With this, if you want to pick a trade there. But now, where should be your stop loss? Your stop loss should be above this, above that. look what happened. See, you are supposed to see a close above this if you want to uh, take your stop loss, but in this case you haven't seen a close. But also see, after this it has created this low and again went back, and now your modified target should be this, not this. Now again, okay, it has gone towards that level. Next time when you are there at this level, you should have taken your exit. That is how it should work. But then again, when you got a chance here as an inside candle formation, or here as a bearish engulfing pattern, you should not take this, because you need to see a red candle flows down below here. Okay, so from there you should have taken till, at this level. Again, it's so for this much of loss, this much of profit is not a good risk versus reward ratio. So, and then again, here you have a bearish engulfing pattern, but then you are very close to this level. That's not a good trade, and you're in the last hour of the market. You have seen a sideways action, and this is the 2:55 p.m. candle, which is a shooting star candle, excellent candle towards the downside. But then your stop loss is pretty huge towards the upper side, and you have a very small area to play towards the downside. So that's it. So either you should have taken a break even trade here and one stop loss trade in the bank nifty, which is absolutely fine for today because that's a genuine stop loss. So I hope you have understood something from today's video. That's it for today, and see you in our another post market analysis video. Until then, happy trading. And if you haven't subscribed to our channel, please consider hitting that subscribe button so that you will see more valuable content on Indian stock markets like this every day. Thank you so much.